Hi, you guys. Welcome back to Firefighters Financial Toolbox. You guys know I always try to find online tools that I think can help people in their pursuit of financial independence. And so I found one. Now, you guys, I've talked about this channel before. One of my favorite channels to watch is the Money Guy Show. And if you haven't checked out their YouTube channel, you guys, you should. These are actual financial guys. Okay, one of them's a CPA. They're both certified financial planners. They know what they're talking about. And on their website, they do have some really good online free tools that you can download. They call them deliverables. Now, you will have to put your email name in there, and it comes to you by email. But I'm going to bring one up. And the one that I'm talking about that I like here is their 2020, the Money Guy 2020 Tax Guide. Now, what's really cool about this now, you guys, this is completely their thing. I'm just showing it to you as an idea. Don't want any copyright infringements. I really like their show, and I think it's a cool tool. So anyway, go to their website, check it out. Anyway, if you come down here, it has a little bit about everything. So if we start here, it has the income tax rates for 2020. So you can see what the limits are that would put you into the next tax bracket. For example, we're in the 22% tax bracket, and I know that that goes up to $171,050. Anything above that would be taxed at 24%. Remember, it's graduated, so up to $19,750 is $0 plus 10%. So that would be $1,975 in tax. After that, above that, it would be 12%. Does that make sense? And you can see the singles are on here as well. It also goes into some estate trusts, and that's a little bit confusing. But anyway, income taxes, your standard deduction amounts, because most of us don't itemize anymore because of the Tax Cut and Jobs Act. We've got it so we know that if you're married filing jointly, you get $24,800. If you're a head of household, i.e. a single parent raising the family, your deduction will be $18,650. If you're single or you're married filing separately, that goes down to $12,400. And then you get an additional amount if you're 65 or over. And if you're 65 or over, or if you're blind, you also get a bigger deduction as well. Talks a little bit about the alternative minimum tax. It also gets into some of the other cool things. The child care tax credit is $2,000 per qualifying child. It phases out $50 for each $1,000 of modified adjusted gross income over $400,000 if you're married filing jointly, or over $200,000 if you're single. It also even gets into the Medicare surtax, when you're talking about unearned income. So if you're talking about like dividends or things like that, if you are over $250,000 for married filing jointly, or over $200,000, then you would get an extra 3.8% put on the 15 or 20% respectively on your qualified dividends or your long-term capital gains. That's what they call the Obamacare tax, you guys. And it goes into some stuff for estate and gift taxes. And here's one that I really like. It talks about the IRA account limits. Now, this is good for 2020. So, and it goes into pretty good detail. So if this is talking about the deductibility for a traditional IRA, if you are single or married and neither of you have a plan at work, there's a full deduction no matter how much money you make. Now, if one of you is covered, if you're single and you have a retirement plan at work, if you make less than $65,000, you get a full deduction, and then there's a phase out. But then if you're over $75,000, then you can't get a deduction. You can still make the contribution, you just can't get a deduction on your taxes. And then we go down to the married. It's less than 104 or over 124. And then in between, there's a partial deduction, you guys. You see here, it's got the phase out range for the Roth IRA. If you're married filing jointly, the phase out starts at $196,000 and completely phases out at $206,000. And for single, the single is wrong. The single is actually 124 and 139. So they got a little typo on their machine there, but that's okay. And as it says, contribution limits for either traditional or Roth this year is $6,000 And if you're 50 or over, it's an extra $1,000 catch up. It even has a page for RMDs, you guys. So you know, with the new CARES Act, the RMD age went up, but you can see it's still got the asterisk because it was 70 and a half. So if you are just turning, I believe last year, 70 and a half, you could still be responsible for that. But you see that 25.6. So when you do the math, you guys, that comes out to about 4% of your traditional assets. And you notice the multiplier gets smaller. What that means is the amount of money they take out gets larger. It's very important if you are in RMD age that you take them, you guys. If you do not, it is a 50% of the RMD penalty. So let's say, for example, that you had to take $40,000 out and you didn't. You would be penalized $20,000 and you would still have to take the $40,000 out and then pay taxes on it. This is the most expensive penalty the IRS gives. Please do not fall into that. Okay, so then it goes into health savings accounts. Now, I've talked about HSAs on the channel before, you guys. An important thing to know is you have to have a high deductible health plan or else you can't be in it. But if you do have a high deductible health plan, you can put this money away, and here's the beauty of it. It goes in pre-tax. It grows tax-free, and as long as you spend money on it, spend the money on a healthcare approved cost, it's tax-free. But here's the thing. If you were to not spend that money can grow tax-free for as long as you want. And this year, the single contribution limit is $3,550. And if you're married filing jointly, that goes up to $7,100 this year. Okay, now it goes a little bit about Social Security. Now, this may be for some of my younger viewers far off, but this is an important thing to think about, you guys. This is why Roth money is so important. So you see, if you're married filing jointly and together you make $32,000 or more, 50% of your Social Security is going to be taxed. If you make $44,000, then 85% of the Social Security is taxable. If you're single, that amount is $25,000 and $34,000 respectively. You guys, these numbers are from 1983 for the $32,000 and 1993 for the $44,000 and $34,000. These are not indexed to inflation, and these came about at a time when people weren't making as much money. But it's going to show you that a lot of people are going to have to be taxed on their Social Security. I like this. It talks about your qualified dividends and long-term capital gains rates. We talked about these a little bit earlier. If you're married filing jointly and you make $80,000 or less, you guys, your dividends aren't taxed at all. If you're in the phase out of between $80,001 and $496,600, it's only 15%. Now, if you were over remember what we talked about, the Medicare tax, surtax. So if you were in the married filing jointly and above 250, it would actually be 18.8%. So you would add a 3.8% tax on that. And you can see that if you're head of household, up to $53,600, tax-free. And if you're single, that amount is $40,000. If you're doing schooling, we have lifetime learning credits. And you see that the phase outs for those are between $59,000 and $69,000 if you're single, and $118,000, $138,000 if you're married. There's also some student loan interest deductions that if you're between $70,000 and $85,000, you're in the phase out range. And then again, for married filing jointly, it's $140 to $170. The nice thing about this, you guys, and then it goes into some of the American Opportunity Tax credits, how 529s work, and some of the other stuff. So the nice thing about this is you can download it, you can save it to a PDF reader, and you can have all this information at your fingertips. It's yours to keep. Goes into the maximum deferral amounts. Of course, for 401k this year, it's $19,500. If you are doing a simple, then it's $13,500. 457, again, $19,500. If you're doing a SEP IRA, a self-employment pension IRA, that's $57,000. goes into the maximum contribution and gives you a lot of the maximum benefits you can get in here, all under one beautiful downloadable file. So you guys, and of course, their business is called Abound Wealth, so they're trying to get your business, and they are in the Nashville, Tennessee area. So if you have a big enough portfolio and you're interested, it might be time to actually give somebody a call. You guys, when your portfolio gets larger, it becomes a lot harder to control on your own. And little tips and little tools we can find online can really help us. And this is a really good one. Again, full credit to the Money Guy Show. This is their thing, and I found it, and I thought it was really worth sharing and getting the word out. If you haven't checked out their program, you guys, check them out. They're a good option, and they give really good advice. They do a show at least once a week, and then they'll break down the big show into some short, smaller videos that are really nice. Anyway, hope you guys got something out of this. I hope you enjoyed it. If you did, drop me a like. Check out their show. Check out their channel. Again, I'm not endorsed by them. I'm not sponsored. None of that. It's just a tool that I found online that I thought was really a good option. And so I hope it helps you out. All right. Thanks a lot. I'll see you.